And welcome to Chartwise Women. This is Mary Ellen McGonagle here with Erin Swenlin each and every Thursday afternoon. This is the show where we bridge the gap, is what we are calling it. In essence, we are sharing our many years of experience, all with an eye toward helping bring you to the other side of the bridge, if you will, and really elevate your trading and your education as it relates to the markets. So, Erin, Happy New Year, and Happy New Year to everyone out there watching.
It's great to be back with you, my
Yeah.
friend. It's
Mhm.
been very interesting markets over the holidays as well. So I
Yes.
think today's subject is going to be quite apropos.
No doubt. Yes, we are definitely in a bumpy period, to say the least, and everyone on their edge of the seat waiting for the Santa Claus rally, which sort of appeared, not with that same strength that we would like to see, and just a lot of waffling. There's a lot that investors need to digest. Historically, a new precedent era, and it's all about a lot of different factors that we are going to get into as we dig in here today. Lots of fascinating things that we're going to be sharing with you as we head into the new year. But let's go ahead and start and share our anchor point for today. And that is patience. All about the fact that patience is a virtue, not only within the markets, but outside of the markets as well. But as it relates to the market, oftentimes we can have a sense of that FOMO, fear of missing out, and a desire to jump in and not miss this potential move in any given area. But today's show is all about using systems, rules, historical precedent to help keep that patience in place and that urge to dive in at bay. So yeah, that's what it's going to be all about today as we move forward, and again share with you our experience. I'm not sure if you have anything to add to that, Erin, as it relates to.
Oh, I just would say that, yes, it's important to show that patience. And no offense, guys, but typically women tend to show a little bit more patience, and it does us well when we're talking about the markets and trading. I've been 10 to 15% exposed to the market over the past probably month and a half, and I'm feeling that FOMO, I think is what you said, that
Yes.
I don't want to miss out, but I'm showing that patience because I know with the volatility, typically that's not going to be in my favor. And December was a very volatile month. So I'm kind of getting back out there right now. The market's starting to look a little bit better, but I'm still staying with those defensive names right now.
Very good. Yeah, we can, if you'd like, take a minute. I'm not sure if you're prepared, if you have a chart of the broader markets or not, but we can maybe give a little
I
bit of a feel for our thoughts on the markets at this point in time. Having a really good feel for where the markets are is going to be really setting you up nicely as you decide whether to get into the markets and potentially where.
Exactly. So we were noting the fact that we had a lot of volatility in December. You can see it really started at the end of November, pretty much right after Thanksgiving. I still can't get over that we had that crazy market day on the Friday after Thanksgiving. But you
Right.
could see lots of volatility. And so being less exposed to the market and waiting for a better time to get in, I feel like I didn't miss out too much because from this point to here, the market's only gained about 6.5 to 7%. So I really don't feel like I missed out on a whole lot. And what I was exposed to, I think was good, because it obviously has helped my portfolio. I would have gotten out of those items. But yes, I mean, the market is now making that turn, probably a short-term move, but the indicators are trying to improve. I'd certainly like to see that price momentum oscillator, the momentum, which I'm going to talk about later. I would like to see that moving up. We don't have that quite yet, but it's certainly an interesting trading day as of Wednesday, the 12th.
Yeah, I can go ahead and share my screen quite
Mhm.
quickly here because you are viewing and sharing with us the NASDAQ, I'm going to go ahead and share I'm sorry, you're sharing the S&P 500. I will share the NASDAQ.
Yes, we need to look at that.
High growth index, and definitely bears a closer look in here, because today, in addition to talking about patience, we will share with you characteristics that will tell you that it is safe to get back into not only the markets, but into these individual stocks. We've seen, this is the NASDAQ. We can see peak to trough here. We've seen certainly quite a bit in the way of a decline, but there are many stocks that are down quite a bit further, 20, 30, 40%. And we call that bottom fishing as far as getting back in. But your first step is making sure that there is stability in the broader markets and we are back in an uptrend. So just looking at this daily chart here of the NASDAQ, we can see that I had highlighted this December low as that first area of support. Subscribers to my MEM Edge report will know that. My second area of support was this 200-day simple moving average. So we did undercut that. And earlier this week, we were able to close the day above this key area of support. So we're in generally good standing. However, your outside momentum indicators are still negative. So in essence, these high growth technology, primarily stocks, are not quite ready for prime time yet. But again, make sure you have your arms around that broader market, a good sense. Are we in an uptrending period similar to from this May to September? And then you can then begin to look at individual stocks. So right now we are going to segue into our charts segment. And Erin, I think you have some names, and I'll go ahead after that. And we're going to take a look at what we would need to see before getting back into some of these really down and out stocks.
All right. Well, let me start off with my Chartwise women. You're getting my subscribers information. Sadly, a day late, but that's why you want to be a subscriber. Natural gas. This one has been really good, and it's one that you did have to show a lot of patience with. It did get quite volatile, but really my point to make with patience is that we need to be patient and wait for the indicators to be the way they need to be. I often tell people that I won't buy a stock unless I see my price momentum oscillator, similar to the MACD PPO, but I won't buy unless it's pointed up. I don't buy any stocks where the momentum is still moving downward. I'm always looking for the new moves, that new momentum, and that's where I want to get in, but you have to be patient and wait for that. And if you go to my trading rooms, you'll know that patience is definitely a virtue when you're timing your entries and exits. You need to wait until that chart is just right. And UNG, I actually noted it on the day it broke out above that 20-day EMA. And I knew I already had this buy signal. I hesitated to get in at this point with that buy signal because I really wanted to see if this was going to be either a flag to the downside where you're going to get an even lower move, or am I going to see that breakout? So I got the breakout, and then the following day, yesterday, we got another continuation with a nice bullish engulfing candlestick, and stochastics, RSI, everything was lined up. So I presented it to my subscribers yesterday. If they're like me, because I did, full disclosure, I do own UNG now. Unfortunately, with the gap up, we didn't get to take advantage completely of this breakout move, but still we're in this, and it's starting to really shape up. We're almost getting a golden cross, we call it, of that 50 and 200-day EMAs. Everything's lined up, but you really had to show patience as you were watching it go sideways like this and look for that new momentum. And the breakouts are always a great confirmation. So that is one of the examples I'm bringing to the table today. This is actually a stock that I put in my decision point diamonds yesterday. And again, I think it's one of those that show that you need the patience, that you need to make sure your indicators are lining up appropriately. So I had this chart come up. It's in the financial sector. If we're going to see rising rates, a lot of times you're going to see banks, asset managers, a lot of these money manager type setups. When you get those rising rates, they tend to outperform. So I'm kind of focusing a lot in that area. And this chart came up, and again, patience, patience, patience. We were seeing this beautiful positive on balance volume. It's telling you volume's coming in. Price isn't quite doing what you want, but when it bounced, that positive divergence was set in. We got a new PMO buy signal. You can see how it's shifted the momentum upward. The RSI is telling you it's now in the top half of its 2-week trading range, and that's a positive. And then stochastics are just about ready. Actually, today they got above 80, and I like to see stochastics above 80. Typically, when they're above 80 and oscillating, you're going to see a rising trend. So I thought that Patria investments looked pretty good. And again, it's all about that new momentum, showing that patience to wait for your indicators to do what they need to do. But I know, Mary Ellen, the charts you are going to show, you talk a lot about that 50-day simple moving average, and I'm guessing that's going to come into play.
Absolutely, yes. So let's dive right in. I am going to begin by sharing with you the elements of a downtrend reversal. We want to know what a successful downtrend reversal looks like so that we can use that precedent currently when searching for candidates that have actively and successfully reversed their downtrend. We're looking at HPQ, a laptop, desktop, computer primarily provider. And so we can see the stock peaked in price back here in May. And we did see a lot of tech stocks peak in relation to that higher interest rate environment back here. So let's take a look at an actual successful downtrend reversal. So oftentimes when these stocks begin to break down below their moving averages, these averages now act as upside resistance. So we can see that's occurring at a lower and lower level. And we do have a couple of what I call head fakes here. And so what we'll find is you want the stock's price to break back above this resistance, back above these simple moving averages. So we did have that occur back here in mid-August. However, when your downtrend reversal fails, the good news is it will do so very quickly. You're not going to be up here and then it'll fail. Oftentimes it'll be within 2 to 3 days, as was the case here with this downtrend reversal attempt, another failure. So let's take a look at the characteristics of what took place once this reversal took hold. And I'm taking us to the end of October. Take a look, the stock gapped up in price above these simple moving averages. It did so on very high volume. Also, there was positive news that was out that could help push that stock higher. In particular, the company came out, they raised their profit outlook. With individuals back at this time going back to the office, they were seeing PC sales really increase dramatically, desktops as well. So the management raised their profit outlook, and then they also raised their dividend. And that's always good news for subscribers. So we had that technical break above those moving averages on high volume, your outside momentum indicators, your RSI, MACD, a little further along on their upside advance, as opposed to these prior downtrend reversal attempts. The MACD was still quite low, not really in positive territory. So this was another bonus that we had. And take a look, the stock did pull back, but now it's finding support at these upward trending simple moving averages, a gap up here. This was the company's release of their third quarter earnings, and the stock on to an uptrend. So this is what we want to see when we were on the prowl for these downtrend reversals. So I'm going to from here share with you, I do a lot of work and I start out with that industry group. And then from there, take a look at underlying stocks. So first up, I'm going to share with you, it's called IHI. It's the medical devices ETF. And when this group gets going, it can really be vibrant. We had a number of big winners with my MEM Edge report from this June into September period, EW, ISRG, a number of these medical product stocks that really went into a nice uptrend. So this is an industry group that I pay quite close attention to, on the prowl for a lot of these high growth names that are in constructive areas. So let's take a look. We can see that it fell quite a bit more than the broader markets. This is a 10% decline, which would put the group into a correction. Now, it is finding support at this 200-day simple moving average, potentially in the throes of reversing that downtrend. So from here, I have a watch list. So this is all about that patience. We'll get more into that. But during this period, as the markets are attempting to get onto firmer footing, you do want to be putting together your watch list. It's going to ideally be comprised of stocks that have high growth characteristics. This is Dexcom, diabetes related product company, big winner for us on that MEM Edge report. However, as it began to break down, we did remove it as a suggested holdings. And really, we can see peak to trough. This is a very significant decline, over 20%. So here we are, similar to that industry group. The growth numbers are still in place. We just need to get this chart back on track. So we can see, as noted in that HP stock, HPQ is the company, you want the stock to break back above these simple moving averages. So very similar, we can use this May period as precedents when we are on the prowl for a downtrend reversal. Breaking back above these moving averages, we want those outside momentum indicators to be in constructive positions, and then ideally coupling that with good news, whether it's earnings, management guiding higher, and into an uptrend it goes. But we can see we are still very early in that potential turnaround. I'm trying to get a handle on the timing here. I believe I have time to share with you one other area that is comprised of high growth stocks. Hopefully we're okay. And so, yeah, here is a software ETF. IGB is the ticker symbol. Really got creamed here in the broader markets, and it is interest rate and inflation related. These subscription-based software companies, their future earnings growth is going to be reduced in the face of higher inflation. So really, they just took this group down. But it is comprised of companies that have strong earnings prospects. At some point in time, we will see a reversal. We're not quite out of the woods yet. You can see we have quite a bit in the way of work before we can see a potential reversal coming out similar to this May period. So this is where you will want to have that watch list in play. And you're going to want to have companies that have strong earnings growth prospects. This is Bill.com, a small cap back office company. And we can see gapping up strong earnings, another gap up on strong earnings, gets hit with the markets. So get that watch list together. And when that group finally turns positive, you can get into some of these nice, strong growth. This is Fortinet, FTNT, still finding upside resistance here as the group continues to attempt to stabilize. And
can I throw a symbol at you?
Sure.
I'm curious what you think of the airlines right now.
Okay.
Jets.
Pardon?
Jets is the one, the ETF
Yeah.
I follow.
Now, Delta Airlines due to come out with their earnings. I'm not quite sure, did they report their earnings? They are due this week, and actually tomorrow, Delta will be reporting their earnings. That's a heavyweight in here. And yeah, good call. JETS is the ETF for airlines. We can see this double bottom formation. The group hits a near-term low, rally attempt, pulls back. So your higher lows is quite constructive. We're now back above these shorter-term moving averages with this golden cross. Erin, I know that you do work with that. The shorter-term moving average crossing above the longer term. So this is going to be your next area of resistance, and we can see how we've had these head fakes in the past I do know that LUB is a standout within this group, very similar to the JETS in this downtrend reversal attempt. So yeah, good call. We'll keep
Could
an eye on
be
that.
interesting.
Pardon?
Could be interesting.
Yes, yes, absolutely. People are really looking forward out 2 quarters and then some as far as some of these downtrend reversal attempts that are currently taking place. We're going to take a brief break. When we get back, we're going to share our wisdom of the week and lots more. We'll be right back. And we are back. We are going to spend just about a minute here really taking a close look at what is taking place in the markets as we enter this new year. So I'm going to take a minute here, share my screen, and Erin, please shout out any.
I will definitely. I have no problem breaking in.
Yes, I appreciate that. So we're looking here. I'm just going to begin by sharing with you a view of the yield on the 10-year. This is $TNX for StockCharts.com is the ticker symbol. And we can see interest rates have really spiked here. And they were already on the move. Last week, Fed Chair Powell came out and said, well, actually, the minutes from the Federal Reserve's December meeting really talked about the need to stem and put this inflation at bay. Very, very concerned. And so they are stepping up or looking to conceivably step up their rise in interest rates and reducing their bond buying program to the point where it drove interest rates higher. So with this, there are a couple of industry groups that we've shown you, healthcare products and some of these tech names that are down and out, but there are areas that are really springing to life in response. These are groups that perform well in the face of higher interest rates. So we're going to take a look at the energy industry group here and take a look. This group turned positive Monday of the last week and has really been in a nice uptrending period. I did my year-end most interesting events from last year all about interest rates. And in that video, you can see it on StockCharts. I talked about energy is the most responsive to a higher interest rate and higher inflation environment. It does tend to fare well. And Erin, I'm sure you were all over that as well.
Yes, I've been watching the same thing. Oil prices are, unfortunately, guys, moving up and probably will continue to move up. But inflation, while it's bad for our pocketbook, there are certain areas that look pretty good, and oil still looks good to me.
Yeah,
Energy still looks good. And like I said, financials. I think financials are as a group, it's as a sector, are breaking out. They look good, and they tend to do better in a higher inflation, higher rate environment.
Absolutely. Yeah, this is an area I've been adding stocks to. This is KRE, the regional banking ETF, charging to new highs here, all about those higher interest rates benefiting these banks. Their profit margins improve when rates are higher with their lending activity. So did want to spend a minute there, but let's jump right in. Erin, I'll let you begin and we can share
our wisdom of the week. New momentum after a pullback offers exceptional opportunities. I showed you a lot of charts where you have to show patience and wait for those indicators, particularly momentum, to start turning up. I think bottom fishing is great, but you don't want to get those fake outs. You showed a bunch of fake outs, Mary Ellen. So patience, watch for those indicators to move higher. And present themselves in a more to give you more confidence.
Sure. And I will agree with you as it relates to patience. That's what it's all about today. And we're trying to impart to you the importance of being patient. So during this time period, unless you are in energy and banking, those other areas, this is the time to really put together that watch list. You want to have companies that have sound fundamentals. They've had that ability to enter into strong uptrends. Get that watch list together so that when that industry group turns positive, you can pounce on these stocks, because downtrend reversals, if you capture them at that correct time, can really be very profitable for you. So that's our wisdom of the week. From here, we're going to talk about an action plan rather than having us just talk at you. We have educational tools that we'd like to share with you so that you can develop your knowledge relative to this downtrend reversal concept further. So Erin.
My action plan for you is to study momentum. You don't have to know the actual, formulas and everything, but study how it works on tons of charts. Look at as many charts as possible and look at how that momentum shift is really critical to making money in a trade. And in order to do those studies, I'll make it easy for you. If you go to my website, decisionpoint.com, you go to the blogs and links page. On the left-hand side, there is a link for workshops that I have done. And I have one that's called Introduction to Momentum Indicators. And so while I talk a lot about my PMO, I also share the wealth and talk about the MACD, the PPO, and a couple of others. So definitely check that out, because to me, I am a momentum trader, and it is key to wait and make sure that momentum is rising and not falling.
Yes, that wind behind your sails, as we like to say.
Indeed.
And my wisdom of the week, my action plan is going to be all about taking a look. StockCharts.com has your daily 5 each and every day. They highlight an individual who talks about 5 of their picks. And there will be a link, particularly if you're watching this on YouTube, down below to my version of your daily 5 going back in time. And it is all about downtrend reversals, and it will list for you those key characteristics you're going to need to see to tell you that that stock's downtrend has been reversed, and then 5 stocks as an example. So for sure, and take a minute. It takes I think it's about a 9 to 10 minute video, so well worth your time.
And if you are watching on StockCharts TV, particularly the app, if you go to the playlist for your daily 5, you'll find that video there for Mary Ellen, and I know I'm in there a few times as well. So
perfect. Yeah, lots of education there. So Erin, how about we talk about what we do when we're not doing Chartwise?
Well, I mentioned decisionpoint.com. My action plan sends everybody to my website, so I'll be brief. I do 2 letters. I do the DP alert, which gives you market conditions. As you were saying at the very beginning, Mary Ellen, you need to know what the market conditions are. And so I have that newsletter. And then the other one that I do is Decision Point Diamonds. And you saw UNG and PAX. Those were presented to my subscribers. You get 10 stock picks per week and a daily Friday trading room, subscriber only at noon.
Very good. And my website is MEM Investment Research.com. You can take a look at my track record, some of my stock picks, and there is a special offer for my twice weekly MEM Edge report at a very nominal fee. So take a look at that. You can trial it for 4 weeks and really be alerted to when the markets and specific areas are safe to wade back in. So Erin, that's it for today's show. Again, Happy New Year to everyone. We look forward to seeing you here next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.